Despite hitting its full-year delivery target, Tesla has been dethroned as the world's largest electric vehicle maker. The company reported 485,000 sales in the fourth quarter of 2023, but that fell short of China's BYD, which sold 526,000 cars. Tesla remained ahead for full-year sales, selling 1.81 million EVs compared to BYD's 1.6 million. However, the gap is certainly closing. Tesla saw a 38% year-over-year increase, but BYD's sales jumped more than 70% from 2022. Despite the competition, Tesla's share of the Chinese EV market remains steady. The Elon Musk-led company owned about 12% of the market in the first 11 months of 2023, up 1% from that same period the year before. Wall Street anticipates Tesla selling even more vehicles in 2024, with the expectation of about 2.1 million electric vehicles being sold in the new year.
The electric vehicle EV market has exploded in recent years, with two major players, China's BYD and the American giant Tesla, leading the charge. But who is winning this global race? Today, we'll dive into the statistics, strategic moves, and challenges both companies face as they compete for dominance in the EV market. We'll explore how government policies, technological advancements, and market dynamics are shaping the future of electric cars and what this means for consumers around the world. BYD has taken the EV market by storm, selling over 3 million units in 2023 alone. A staggering 61.8% increase from the previous year. This includes both battery electric vehicles, BEVs, and plug-in hybrid electric vehicles, PHEVs, giving the Chinese automaker a unique edge over its competitors. With 1.6 million BEVs and 1.4 million PHEVs sold, BYD has managed to outsell Tesla in certain quarters of 2023. For instance, in the last quarter, BYD delivered 526,000 BEVs compared to Tesla's 484,000. This marked the first time BYD surpassed Tesla in pure electric vehicle sales, a significant milestone in the global EV race. But BYD's growth isn't just confined to its home market. The company's overseas sales skyrocketed by 300% in 2023, particularly in regions like Europe and Southeast Asia. In December alone, BYD exported over 36,000 vehicles, a 17.85% increase from the previous month, marking the third consecutive month that exports surpassed 30,000 units. The Shenzhen-based company's aggressive expansion plans include launching its luxury electric brand, Denza, in Hong Kong and Macau, further bolstering its position in the global market. One of BYD's key advantages has been its focus on developing its supply chain and manufacturing process in-house. BYD's Blade battery, introduced in 2020, has given the company a significant edge in terms of safety, cost, and efficiency. The company's investments in lithium battery technology have paid off, as it now controls a significant portion of the battery manufacturing process, an essential factor in the EV market. BYD's ability to produce batteries at a lower cost has allowed it to offer competitively priced EVs, further driving its growth. BYD's diversification has also played a major role in its success. The company's business segments range from EVs to hybrids, buses, and trucks, providing a more stable revenue stream. In 2023, BYD's revenue soared to 654,121,000 Hong Kong dollars, a 36.3% increase from the previous year. The company's net income also saw significant growth, rising from 4,758 million Hong Kong dollars in 2020 to 33,239 million Hong Kong dollars in 2023. While BYD has been making waves, Tesla remains a formidable force in the EV market, particularly in North America and Europe. In 2023, Tesla delivered over 500,000 vehicles in the U.S. and another 350,000 in Europe. With its higher profit margins, between 17 to 20% per vehicle, Tesla maintains a strong financial position compared to BYD, whose profit margins are slightly lower, around 12.3%. However, the competition is heating up, and Tesla is feeling the pressure, as evidenced by a 20% drop in first-quarter sales in 2024, compared to the same period in 2023. Tesla's dominance has been largely due to its premium vehicles and advanced technologies, including its autopilot system and expansive supercharger network. But as BYD continues to innovate with its blade battery technology, which offers a safer and more cost-effective alternative to Tesla's lithium-ion batteries, Tesla has had to adjust its pricing strategy, particularly in China, where BYD controls roughly 35% of the EV market. Tesla's main strength lies in its brand recognition and global reach. The company has successfully positioned itself as a premium EV manufacturer, and its focus on innovation has kept it ahead of the curve in terms of technology. Tesla's autopilot and full self-driving FSD systems remain industry leaders, and the company's supercharger network, which spans across North America and Europe, gives it a major advantage in the charging infrastructure space. However, Tesla faces several challenges, particularly in China, where it has had to lower prices to compete with BYD's lower-cost alternatives. The Chinese government's subsidies and tax breaks for EV manufacturers have allowed companies like BYD to offer more affordable options to consumers. In contrast, Tesla's Model Y, which starts at 258,900 yuan, 35,166 in China, is priced significantly higher than BYD's equivalent models. This pricing disparity has made it difficult for Tesla to maintain its market share in China. The EV market is not just growing in the US and China. Europe and India have also seen substantial growth in recent years. In India, EV sales surged by 91% year-over-year in 2023, with 1.5 million units sold. The global push for sustainability and reducing carbon emissions has driven governments and consumers to prioritize electric vehicles over traditional gasoline-powered cars. However, the EV industry faces several obstacles, including supply chain issues, fluctuating raw material prices, and infrastructure challenges. The cost of key materials like lithium, cobalt, and nickel has decreased in recent years, which is expected to reduce the overall cost of EVs in the long term. According to a report from Goldman Sachs, the cost of battery packs, which account for 30% of EV manufacturing costs, is expected to decrease to 15 to 20% by 2040. The race between BYD and Tesla is far from over. Tesla's upcoming Model 2, a low-cost EV aimed at budget-conscious buyers, could shift the balance once again. Similarly, BYD's global expansion plans, particularly in Europe and Southeast Asia, will be crucial in determining its future success. Both companies are poised to play a major role in the global transition to electric vehicles, and the competition between them will continue to drive innovation in the industry.